Good afternoon, everybody. Welcome back to another exciting episode of the Breaking Bitcoin Market Update. Today is August 23rd, 2022. My name is Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. Hopefully you guys are doing absolutely fantastic, however you are today, and wherever in the world you happen to be tuning in, whether you're watching us on Twitch, YouTube, DLive, or Twitter. We're now streaming to Twitter. Today marks a pretty epic day for the CC stream. This is possibly the first ever stream that I'll be doing with Wi-Fi now that we got the gig Wi-Fi up and running. So very nice to be back to streaming. Very wonderful to see all of you guys. We've got a lot to talk about. Obviously, the topic of today's show is going to be, is the bear market over? We have gone through a lot of pain over the last 6 months. We have seen the cryptocurrency markets completely deflate. We've seen a large collapse in market capitalization, active addresses, general on-chain activity. And today we're going to do a mix of two things. We're obviously going to be looking at price charts and talking about fundamentals of trading, giving individuals ideas and strategies that they can utilize to better equip them to deal with this area of the market, how to position themselves. Should you be thinking 3 months out? Should you be thinking 6 months out? Should you be thinking 2 years out with your positions? How can you take advantage of the short-term volatility? How can you best position yourselves just overall to catch the next massive trend? Or should you be stuffing everything into Bitcoin shorts and waiting for the next downside potential? We're going to be covering all of that today. And in addition to that, we're going to be going through some on-chain fundamentals via Glassnode to really get an idea of what previous bear markets have looked like, what we can expect, and what we want to see for when we can anticipate or when we can have confluent signals, confluent signs that we are emerging out of the bear market and moving back into an area of price appreciation on a macro scale. And then we're going to conclude today's episode by bringing on our senior analyst, Alexander Pearson, for him to give his comments on the charts, on the overall bear market activity, the cryptocurrency markets, the DeFi sector, and everything in between. So strap yourselves in. It's going to be a great show. Let's get right going with it by getting into the show. Okay. So we'll start off as we are wont to do with an analysis of BTC. Starting off as we did. Now we did make the switch. We are going to be looking at the Binance chart, the BTC USDT Binance chart. The reason why is because I've been using the Bitstamp chart, and I do like to use the Bitstamp chart whenever I'm doing long form analysis, if I'm looking at previous cyclical trends. But when we're looking at kind of the day-to-day activity, we really want to be looking at the most liquid exchange, especially because volume is so important for our analysis. So we are going to be focusing on Binance, the BTC USDT chart. That's what we've got going on. I'm actually going to take these headphones off because I don't actually need them right now. Give my head a little bit of breathing room. Anyways, so all of this we've talked about quite a lot before. What we've really focused on over the past few months as Bitcoin was descending from the previous all-time high that we experienced back here in November is we were really looking at we were really looking for bottoming targets. And on the weekly chart, we talked about the importance of the 200 weekly simple moving average. We can really see this in effect if we do go to the Bitstamp chart. And we can really see just the power of the 200-day simple moving average. It is essentially called the bottom of all Bitcoin bearish markets, going all the way back to 2015. And you can see that this is where we have enough price data on this chart, the 200 weekly moving average, to actually begin formulating. But as we can see, if we were to trace this back, we can really see that even this dip was quite beautifully clocked by the 200-day simple moving average. So we have experienced something, and then again, just for simplicity's sake, we can see the weekly simple moving average calling the bottom here at the 2018 plunge, and then again catching that 2020 dip during the March meltdown. So a lot of good reasons, and here we are back again now in the late summer of 2022, moving into the fall. And the question is, are we done? Further left to go? What is the state of the chain? What's the on-chain fundamentals saying to us? What does all the trading activity tell us about what we can expect from Bitcoin? I think there's a lot of evidence to suggest that in general, the worst is really over. We've seen a massive decline in price valuation. And this is very interesting because we had a whole new wave of individuals. We had a whole new wave of kind of SOPR, so short time frame individuals come into the market during this massive explosion, 2021. Something that we really hadn't seen before. Obviously, 2018, 2017 was, well, not really. 2017, 2016 was crazy. We saw an influx of all of the things that kind of came right back around in 2021. ICOs, but they were called IDOs now, NFTs, but we really saw different versions of that back in 2017 with different celebrity promotions and token generation. And all of this was just kind of repackaged. So lots of topping signs that we saw back here throughout the summer of 2021, and of course, boom. But again, as we are here in the late summer of 2022, I want to look at some actual fundamentals. So the first thing, obviously, just being that we are in the vicinity of the 200 weekly moving average. We did close below it for the first time ever in history. But as we can see, that really formed a local bottom, and we've really pushed up from there. However, I will say this. I don't want individuals to get massively excited right now. I don't, and especially, I want to dissuade individuals from using a lot of leverage. This is something that I've noticed over the past few years. In every single, bear market turn, every time we've been down near the bottom, individuals tend to, and this is just completely natural, if you've lost a lot of money over this area of the market, and your primary strategy that made you money during bull markets isn't working, the primary strategy in cryptocurrency is the same as it is in all appreciable asset classes, which is buy something that is undervalued or at a low price, and then you simply wait until it appreciates in price and then you sell. This is the kind of basic rinse and repeat model of investing, putting your money somewhere where it can earn yield. And if you're able to grab something like cryptocurrency or Bitcoin at a lower price and watch it appreciate 2,000%, you're going to do well. But those strategies don't work in bear markets because you can't just buy and hold things. Of course, you can if your time frame is 2 years out, 3 years out. But as we've learned and as the data shows, individuals simply cannot handle their risk, and individuals simply cannot handle the volatility of the cryptocurrency markets. Thus, we get okay, another data point. The weekly RSI, the relative strength index. And, I've obviously poo-pooed on the RSI a lot. I think a lot of traders use it incorrectly, but it can be a very powerful tool for helping to find confluent signals for identifying cryptocurrency in all asset classes. Especially the higher out you go, the farther resolution you have. So as we can see here, RSI did reach oversold levels at the exact bottom of markets. We're also going to look at some, if we have time, we'll look at some factors as well. This is exactly also the bottom of the markets correlate perfectly to when bond yields for 10-year EU notes and 10-year US notes reached their peak, and then yields actually dropped off as the cryptocurrency markets and the traditional equity markets actually recovered and put in this, what everybody is calling a bear market rally, which it certainly is. And now yields are starting to go back up on the rise. And of course, Italian bond yields just absolutely blew through the roof. So, God help Europe. God help Europe. Okay. Let's see here. So I want to go back now. Let's get off the Bitstamp chart and go back to the Binance BTC USDT. Again, another metric that I want to really focus on too is if I can actually. We're going to go over to Glassnode here real quick because I want to show you guys changes for Bitcoin. And this is a reason why I want to focus so much on Binance. So if we go down here, and we can just see some of the top 3 exchanges. If we look at balances on exchanges, all right, I want you to pay attention. So this first chart right here is the Bitcoin balance of Coinbase. So as we can see throughout pretty much everywhere, the balance of Bitcoin on Coinbase has increased. All right, Coinbase is a very popular exchange. It's the #1 exchange in the United States, probably definitely top 10 exchange around the world. This is most individuals that I meet. This is their first avenue into cryptocurrency. But exchange balances have been declining for quite a while there. Basically ever since 2020, November 4th, 2020 is kind of the top here. And the same for Huobi. In fact, there's a lot of rumors out there circulating by certain cat-figured avatars on Twitter that Huobi is essentially insolvent. So there's that. Keep that in mind. I don't do any active trading on Huobi right now. I do all of my active trading on Bybit and Binance US, but I digress. But just look at the exchange balance of Bitcoin on Huobi absolutely plummets. So this graph does tend to lead some credence to the fact that Huobi is in a little bit of trouble. But if we compare that with Binance, I mean, the exchange balance on Binance has done nothing but go up and up and up, even through this decline and downfall. And that's why watching Binance price charts or watching what Binance is doing or paying attention to what's going on around Binance is very important. Cryptocurrency is one of those very interesting market classes where, unlike traditional equities, you can have an edge in knowledge, even if you're not even if you don't have privileged information. There's so much data coming out of the cryptocurrency markets every single day. And your only challenge is in identifying what data is relevant and then interpreting that data to reach a conclusion. If you can do that still at this stage, and still probably for a long time, you can develop a true edge in the market and have actionable information that other people do not have access to. You don't need any special tools. You don't need any special equipment. All you need is your mind and a basic understanding of statistics, which you can learn on YouTube. All right. Just type in how to do data analysis on YouTube. Right. You can figure all this stuff out. So anyways, let's go back over here. And so for that reason, I'm paying very close attention to the nominal volume on the Binance BTC USDT chart. This coupled with the fact that they also reduced their fee tier for their premium VIP class, their top VIP class, to basically zero, means that there is more incentive to now route trades through Binance. So I want to talk about this absolute explosion of volume. And it's very important because increases in volume that are significant tend to come into the markets in two places, right? The end of an uptrend and the end of a downtrend. As we can see, there has been a massive explosion in volume in BTC ever since we reached the 200 weekly simple moving average. Individuals are accumulating, and we're seeing any distribution that's occurring right now, which is interesting because I don't have the chart to show you, but if we look at the individual cohort sizes, right? So if we look at what whales are doing, are whales accumulating, are sharks accumulating or distributing, are retail accumulating, are shrimps accumulating or distributing, we can see that throughout this area, you guys will just have to take my word for it right now because I don't have the chart in front of me. But throughout this area of the market, whales and retail. So this is kind of interesting. So top whales and retail were actively accumulating BTC. Meanwhile, as we moved into these last 4 weeks of price action, we saw sharks and to a lesser degree whales move into distribution mode. Okay. So sharks and whales move into distribution mode, but not with any of the volume that they were previously showcasing. Not with any of the volume that were previously showcasing, which indicates that there is still significant, not still, but rabid sell side absorption, right? Which means even though sharks and whales are distributing in this price area, price isn't moving lower very far, right? Which indicates they're taking advantage of their overall area. And what's super interesting is the fact that they're doing this at a loss. All right. So if we go over and look at, this is my dashboard in Glassnode. I'm going to go through these metrics with you guys. These are metrics that I'm looking at for the recovery of Bitcoin, on-chain data that I want to look at for the recovery of Bitcoin. So if we go look at right here, this chart right here. Okay, so this is Bitcoin net realized profit and loss as a percentage of market capitalization, the 90-day moving average. So all this indicates, what this metric looks at is it looks at on-chain data, and it looks at what was the price that that one Bitcoin entered into a wallet at, and what was the price that it was spent at. Okay, so it considers the accumulation of one Bitcoin as a buy essentially, and it looks at the spending of that Bitcoin or sending it somewhere as a sell. So all this metric is trying to show us is, of the coins that are moving around, are those coins being moved in profit? Someone received a Bitcoin at 10,000 and now they're moving it at 20,000, or did somebody buy a Bitcoin at 52,000 and now they're moving it at 20,000? That would be a loss. The other example would be a win. And I just want to correlate. Look for example. So this is let's look at you can correlate this is the 2011, this is 2014, 15, and this is 2019, 2018, the previous bottom of Bitcoin's price action. You can see that at that area, we saw two things here that I think are important. Oh, something wrong with the mic? Sorry, guys. Let me make a quick adjustment to the microphone. Okay. Does that make it better or worse? Drop it down to 55 dB. All right, how about that? Better or worse? Okay, cool. Sorry about that, guys. Yeah, I had my noise gate up a little bit too high. See, guys, it takes a village to do a cracking crypto stream. It takes a village. Much gooder. All right, good. All right, so again, what this metric is showing us is of coins that are spent, are they in profit or loss? And every single bear market, the end of the bear market is characterized, as you guys can see here, by a large increase in coins that are moved at a loss. All right. And what's very interesting is the pattern. Obviously, we have this large spike down. We form a very sizable we form something that is very noticeable, and then price starts to tick back up. Now, keep in mind, this is a 90-day moving average. So as we can see, it's not going to catch the tops, as we can see here. So let's just look at this market top. It takes a while. We've already declined actually here in price by 40% by the time our NUPL or NRPL, net realized profit and loss, catches up. But the point of this metric is that once we actually move from red into green, it does indicate that the recovery is on way and that accumulation is a little bit safer to begin. So if we look at where we're at right now, and we can view this in the workbench so you guys can see a little bit better. Okay, and we'll zoom for the last 3 years here. Okay. So as we can see, here's where we are right now, just a little bit more zoomed in. As you can see, we've had that massive noticeable spike. We've had that significant shift from coins being moved in profit into coins being moved at a loss. All right. But it seems like we might have reached a peak and are beginning to recover. So something very important to watch for, and this is a paid metric. This is a $39 a month Glassnode feature. This is an advanced chart. I actually created this myself in the workbench mode, so you can create all these charts using formulas. But one interesting metric to watch for here is, this is going to take a while, but when we see this chart switch from red back into green, so when we basically reach parity here at 0, that's going to indicate, certainly to me, that the worst is over and that we can really begin accumulating for the next 2 or 3 year bull run. All right. So something very important to watch. All right. Let's go back to the charts. So explosion in nominal volume, RSI oversold, recovered, vicinity of the 200 weekly moving average. I want to look at something else from Glassnode now too. I'm going to go back to my dashboard. And I'd like to look at this other metric called valuation models. All right. Again, I created this in Glassnode. So what we're doing here is we are identifying 3 key on-chain and 2 key on-chain metrics for determining Bitcoin's price. And then we're going to use a hybrid technical and on-chain indicator. That's the purple one. So to understand this, let's just zoom in here a little bit to 3 years. All right. So the yellow line is realized price. And what this essentially does is it's a different way of looking at Bitcoin's price. Instead of just looking at what the market price is, it's looking at, again, very similar to the net realized profit and loss. It's looking at what was the price of a coin when it was moved. All right. So if a coin moved into a wallet at 10,000, okay, and it hasn't moved since, it's going to consider the price of that coin 10,000. All right, so it's basically taking the price of every coin that exists on chain at the price it was last moved at. This is giving us a good indication of basically what the hodler cost basis is. So for individuals who are holding on to coins for a long period of time, what is their cost basis? And the reason why this is so important is because it essentially gives us a nice predicted floor for Bitcoin's price that is not derived from technical analysis. It's derived from the economics of Bitcoin holders and actual on-chain data. It's not predicting anything. It's just showing what is. This is the cost basis. This is the price of max pain for individuals who have already entered into their positions and purchased Bitcoin. So for that reason, realized price has, very similar to the 200 weekly moving average, and interestingly enough, so realized price seems to be heavily correlated with the value of the 200 weekly simple moving average, i.e. the actual realized price for Bitcoin over the last 10 years has essentially been the 200 weekly moving average. Keep in mind, we didn't have a 200 weekly moving average until about 2014, but I digress. Okay, So as we can see here, back in, this is 2020. So this is the March meltdown in 2020 when BitMEX tried to murder the entire cryptocurrency markets. Or maybe, and by murder the entire cryptocurrency markets, I mean, really tried to stock up Arthur Hayes' long-term hodl bag. You know what I'm saying? Yeah, never forget, man. And this has just been a very good indication for what the bottom price of BTC might be. And as we can see, we broke below the realized price of BTC, meaning that on average, every Bitcoin hodler was in a loss. Now, of course, that's not actually true. There are, of course, Bitcoin hodlers who bought at 100, who bought at 1,000, who bought at 9,000 and are still up 2x. But on average, if you average out the average cost basis for everybody who's ever bought Bitcoin, we're all at a net loss. Now, we did break back above the realized price metric for a while, but we are now back below it. Another sign of weakness and another indication that this bear market is not necessarily over just yet. Now, let's see here. Okay, in the blue, we do have a different metric for determining what a bottom price of Bitcoin could be. The blue metric is what's known as balanced price, and this represents the difference between the realized price, which is the yellow line, and the transferred price, which is a CoinDay time-weighted price. So this could be thought of as a form of fair value model. It captures the difference between what was paid, or the cost basis for Bitcoin, and what was spent or transferred. So it's just capturing that difference. And then finally, we have delta, which is the purple line. And this is, again, this is a new metric from Glassnode. Not a lot of people are using this yet. I just recently learned about this. And it's a hybrid price model. It's founded on technical and on-chain bases. So it's the difference, the way it's calculated, it's the difference between the realized, that's the yellow line, and the all-time average price of Bitcoin. So what's interesting is that this purple line, the delta price, has previously caught the bottom wicks, right? So you could consider, remember we talked about this previously when we were looking at the 200 weekly moving average on the Bitstamp chart. We talked about this. We've talked about this for a while. If we look really closely, we can see that although the 200 weekly moving average does capture the bottom really well, we do obviously have these long wicks below it, right? So in this one's very important. Like this is a 30%, 26% wick below the 200 weekly moving average, which if you're looking to set limit bids, you know, your stop loss is what, 26% away. You get liquidated because you're using leverage. We have this wick right here below the 200 weekly moving average, pretty significant, about a 12% wick below. Same if we go over here, we actually caught, I mean, perfectly back in 2018. But then when we get to 2020, I mean, when BitMEX, when the liquidation engine was going ham, we went almost, again, another 30% wick below. But the value and the importance of the delta metric is capturing those price wicks. So now let's zoom out 5 years and you'll see exactly what I mean. So here's that 2018. Here's that 2018 bottom, and we bottom right at that delta price. Here we go. Again, back in 2011, we captured the absolute bottom. And then again in 2015. So 2015, 2011, and 2018, that delta price actually marked this is absolutely the bottom for Bitcoin's price. Set your limit bids here. And you might ask yourselves, well, that's very impressive, Justin. That's a very important metric. Maybe we should pay attention to that. Where should we set our limit bids in case we do have another leg of downside? We should probably set it at that delta metric, which is so sufficiently and so well caught the bottoms of all the previous price wicks. Well, I got some bad news for you guys. That price level is coming in at $13,686. So I'm saying this right now, right here. If we do have another leg down, if this accumulation area, or excuse me, if this current consolidation area of Bitcoin is not sufficient, if we are going to be dragged down by the macroeconomic forces which are applying massive sell-side pressure to all risk-on assets across the board, the bottom of Bitcoin's price, I predict, will be the high 13,000s or 14,000. Calling that right here, timestamp that, put it on a t-shirt, that's where I'm going to be going all in. Okay. So we've got so much to go through, but I want to get Alex on here pretty soon. And we can only go for an hour, but I want to be getting back to doing this every day. Just for a quick update for everybody, just so you guys know, I'm not in Colorado anymore. I have relocated back to Iowa, so we do have a new studio set up. Took a while to get it set up. We are back to the green screen, just for fun. I'll see how you guys like it, see what the difference is, or see what the interest is. But the reason I came back here is so that I could focus on work and really just have my wits about me as we go through what I think is extremely important. Plus, I just started another really large project, so we now have the time and availability to really get back to what CC was: daily live streams, daily trade updates, market analysis, mentoring, new courses, educational content. So if you guys are new to the channel, make sure to click subscribe and follow along for the ride. Links in the description down to our free Discord, as well as all of our educational material, including our indicator suite and our courses. Definitely a lot to keep you guys busy, and we're going to be pumping out a lot of content as we move forward. Let's see here. Okay. So we talked about nominal value, we've talked about RSI, we've talked about some on-chain data. Let's zoom over here and go back to the Glassnode dashboard. And we'll talk about another metric for why I think the bear market is not necessarily over. So this is a very interesting metric. Again, this is a new advanced feature from Glassnode. I put this together in their workbench area of their website. This is called New Addresses Momentum. So what we have here is we have a 365-day moving average of active addresses, or excuse me, of new addresses, and then we have a 30-day moving average of active addresses. So the black chart, or the black line right here, is the price of Bitcoin. The red line is going to be the 30-day moving average of new addresses, and the blue bar and the blue line chart here, the blue column chart, is going to be the 365-day moving average of active addresses. So what we're trying to determine here is, are the last 30 days, or is the 30-day moving average, is the recent amount of new addresses, of people actively coming in that are new to Bitcoin, is that greater than the yearly moving average? So are we noticeably increasing in on-chain activity? Are there new speculators coming into the market? Are there new hodlers coming into the market? Are there new believers coming into the cryptocurrency markets? Because that's the thing that you need. You need those things. You need retail interest, you need institutional investment, and you need a narrative for prices to move up in a sustained bear market. There's a pattern, there's a way these things have to happen. All the pieces have to fall into place, and when they fall into place, all you do is let gravity and ignition do the work. You have to light the fire. So very interesting to note. Watch this explosive growth from 2011 to 2017, where you basically have this massive onboarding of new members, where the 30-day moving average is always above the yearly moving average. This is a beautiful, explosive time, a beautiful period of explosive growth for the Bitcoin blockchain. And then we reach 2018, the peak of the bull market, and what happens? Interest just falls off a cliff. The 30-day moving average absolutely just nosedives right down below the yearly moving average. That has never happened before. That had never happened before, where we actually had the 30-day moving average trading below the 365-day moving average. So what this indicates is that interest completely fell off, and you can see that it just, as Bitcoin's price goes completely sideways, we have nothing. It's a little volatile, but it grows, it declines, it grows, it declines. It basically goes sideways until the bottom comes in late 2018, early 2019, when we actually see the 30-day moving average climb back above the 365-day moving average. And we know now, on chain, we have new interest in Bitcoin coming into the markets. And that laid the groundwork, that laid the bedwork for the bull market that followed, the 2020, 2021, and 2020. Well, not 2022 so far yet, but, and again, look what happens back in the summer of 2021. Right? When the cryptocurrency markets fell 50%, essentially, and then we recovered to a new all-time high. But this is extremely important. Look, we have that same nosedive behavior, and this is the summer of 2021 right here. Look at Bitcoin's price. We recovered to a new all-time high, but look what happened with new addresses. There was we formed a lower high, while Bitcoin's price formed a higher high. the number of new addresses formed a lower high, a very clear divergence, indicating that the steam was really out of this bull market because the retail, the new interest, the new individuals coming into the market was not there anymore. It was unable to reach new highs, even though Bitcoin's price reached a new all-time high. It's a clear warning sign. Clear warning sign. And look, we're seeing the same behavior right now that we saw back here. Just a fall off and a decline as new addresses basically go sideways. So again, another important metric to watch for is this one. We want to see the 30-day moving average climb above the 365-day moving average, indicating that that new speculative interest is coming back into the markets, that individuals are coming back in, that they're picking Bitcoin back up, and they're putting money, fresh money, back into the markets. A very important signal for a bull market. So listen, we've got a lot. We could go over these metrics all day, and I actually have a lot more to show you. I'll just give you guys an indication. So we've only gone over 2 metrics so far. We've still got the percentage of revenues, minor revenues from fees. We've got exchange inflows and outflows. We've got the exchange flow multiple. And then we've got more that we could talk about with the net profit and loss, as well as I want to go over ASOPR and SOPR basically with you guys. But for now, I would like to bring on senior analyst Alex Pearson, get his thoughts on the market, and have a good conversation about where we're at. So guys, just bear with me while I get the Discord all hooked up and get our guest on the stream. Okay. And I've got Alex live on the stream.
Hey guys.
Can you hear me okay, Alex?
I can hear you just fine. Can you hear me?
I can hear you just perfectly, and I think they can too.
Are you getting any feedback?
None at all.
All right.
You're looking very dapper today, my friend.
Thank you. I just got a haircut earlier today, so it's we'll see how long I stay dapper, but so this works for now.
So for those of you who don't know or haven't been watching the show for a long time, Alex used to be on the show every single day. For pretty much all of 2021, Alex was the show. So it's been a while. It's been a few months since Alex has been back on the show. So Alex, just give us an update on where you're at and like how's life been, man?
Things have been good. Things have been up and down. I made my first million in February, and then I lost my first million in March and April. It was a great couple months. I'll say that. Then let's see. I've been working on. I originally came to the island to start a fund, and it sort of fell through, and I was fine because I'm a full-time trader. I'll just make money myself. But over the past few months, I got together with a new team of people, as you know. And have been working on that. And recently, I've been working on a protocol that isn't like a Ponzi-nomic token model. It's like an actual functional business model. So I'm kind of happy with that. And we recently got into an incubator program for VC funds. So we're see how things go.
Yeah, things are going really well. Obviously, I know nothing of what you're talking about.
Yeah.
No, but I'm excited, man. I mean, things are going to do well. We're positioned at a beautiful time, and I'm just hoping that everybody that's watching can basically just be along for the ride with us. We've got a lot of information to share, a lot of data to share. We've been here for a long time. We've got a lot of experience. So, you guys, I will be paying attention to the chat as best as I can. Just a second here. Let me scoot this right here so I can pay attention to the chat. All right, here we go. I'll be paying attention to the chat. And Alex probably watches the chat better than I do at all times.
Well, I can't right now. Well, I guess I could. I could be watching chat right now, actually. Yeah. Okay.
All right. So if you guys have any questions for us, I'll be happy to answer them. But Alex, I guess basically just give me your take on where we're at in the market cycle, what we've seen, what's different over the past 6 months, kind of, what have you seen, I think coming out, what's new in the crypto space, what's different in the crypto space, and what do you think is going to be different moving forward over let's say over the next 12 months? What do you think might be different from what we might have experienced previously, or nothing?
It's hard. The last crypto bear market, we didn't have all these macroeconomic conditions that were weighing on us. Yeah, it's kind of hard to look at what's going on with the European energy supply and not think like, man, shit's about to really hit the fan. But that being said, to get to this price point in crypto, we had to have, Terra collapsed, took out billions of dollars, deleveraged the entire DeFi space, causing Three Arrows Capital to collapse, which took out Voyager and Celsius. So there's been just it's just this massive, capitulation and deleveraging by institutions. It's like forced selling. It's like a fire sale prices that got us down here. So we have to ask. We see there are buyers in this area, clearly. Like, some people have started bidding up the price, but I think everybody's very unsure. And it certainly feels like maybe we have one more leg down, maybe. But this also feels like, if you look around at different cryptos and different stocks, these are good prices, comparatively. I look at different alt markets. I see accumulation taking place. I feel like there's just a lot of mixed signals. The macroeconomic outlook just looks abysmal. It looks so bad, and the dollar looks strong right now. But it's hard to say. Sometimes the charts turn around before the situation in the world turns around. It's a crazy thing. But I think overall, I would already be looking around and seeing what's a good price and considering accumulating things. That's where I'd be at.
Yeah, and we kind of see that. What's really interesting is, in my opinion, one of the data points that I look at, and I don't have the chart in front of me, but it's essentially, I've seen two charts recently that I think are very interesting. One is actually two charts, but it's looking at the net positioning of traders across all derivative exchanges in the cryptocurrency markets, and the other is looking at the net positions of traders on the CME futures markets.
The COT, the Commitment of Traders report.
Yep. So we can see that right now, there are more net short positions than there's ever been against the S&P 500. There's more net short positions on Bitcoin than there's ever been. But yet price is not moving down. And so then I was I knew that. I saw that data point a couple of weeks ago, and I was just keeping that in the back of my head. And then the other day I saw another chart. And this actually looked at correlating the open interest of all those positions. And the reality is, like, while there are more positions, the open interest is lower. Like, there's a less quantity of money because prices are so much lower, right? So this is why nominal volume versus amount of coin volume is very important to look at. If you've had a reduction in price by 80%, well, of course, if you're just looking at volume as the number of coins traded, that number is going to go up because they're way cheaper. What used to cost 10 coin, one coin is now 10 coins, so you have to move 10 times as much.
Yeah.
So this was kind of pointed out by the author who was writing this analysis that I was reading, that there's really no indication that we're going to have a massive move anywhere anytime soon. It's just going to be sideways because the volume isn't there. The open interest isn't there.
Well, I have another question. So we were talking like logically looking at the markets. I have how we got here, that these are kind of fire sale prices. I have a different question. Who is going to sell here who didn't already sell during March, April, May, and June, which were pretty fucking rough? Like, who's like, now that they held through all of this and they're like, no, $17,000 Bitcoin, that's it. I'm selling. This is just too much for me. It seems to be like the people who held through all of this. Certainly you've got to feel like, that's it. I'm in for the long haul. Or you're just the type of person who's like never fucking selling. It's like $3,000 Bitcoin. You're not thinking of selling. You're just going to back up the truck. So, like, what's the psychology of people who are selling this area of the market? I wonder that. That's a big, that weighs on my mind. But again, then you look at macroeconomics and people will be like, well, maybe they're just like trying to afford fuel, Alex. Maybe that's why they're selling. Maybe they're trying to like heat their house. I don't know.
I agree with you. I mean, we can, so this is, let me see. Let me pull up a chart here. Here we go. Just a second. Here we go. So this isn't directly to what we're talking about, and it'll take you about 10 seconds to see this on my screen. But for everybody watching, what I'm looking at right now is from Santiment, which is a website to view graphs and charts, looking at social indicator metrics. So what this chart is doing is it's looking at the supply of Ethereum held by different cohorts. All right. So the yellow line indicates the cohort who own between 100 and 1,000 Ether. So that's retail. As much, even though I'm sure, 1,000 Ether probably sounds like a lot to most people, so this isn't shrimps, but retail. And then we move up the line with the brown line indicating the cohort between 1,000 and 10,000 coins, the orange line, or excuse me, not the orange line, but the purple line indicating the cohort between 10,000 and 100,000. So 3 different cohorts here, and then the green line is the price of Ethereum. Notice that throughout all of 2022, the yellow line indicating those who own less than 1,000 coins have continued to add to their position, right? And now there's been no change. The reason why I think there's been no change, right? Notice that the peak, the trowel was hit here in June of 2022. And then retail hasn't gotten rid of their positions. They're just staying absolutely flat. I think it's because for the most part, individuals that fall into this cohort are not divorced from the same economic factors that have been influencing the rest of the world. They're basically out of dry powder. They don't have money to buy more. I'm sure if they could buy more Ethereum, they would. Meanwhile, if we look at the larger cohorts, the purple and the brown, individuals holding 1,000 to 10,000 and 10,000 to 100,000, we can see that throughout the really steep part of the bear markets, they distributed, right? Like they decreased their supply noticeably. But then when Ethereum's price bottomed here, you can see that there's a little bit of volatile back and forth, probably some large swing trading. Honestly, actually, in my opinion, what this really is that we saw altcoins versus Ethereum have a momentary burst, and I think this is whales trading in and out of altcoins to Ethereum. But now we've seen a clear rise in the accumulation of Ethereum by those top whales. So that's right in line with your point. Looking to accumulate. Is this a good idea to accumulate? Individuals who own anywhere from 1,000 to 100,000 Ether certainly seem like this is a good area of the market to begin accumulating their stack.
It certainly seems that way. You can definitely see that if people have money, that they are buying Ethereum at this price level. I mean, I'm in some Telegram chats with people who run actual funds, and I know for a fact that they were scooping up FE and G Bitcoin when price was dumping below $1,000 and below $18,000 for Ether and Bitcoin respectively. I mean, they're good prices. It's just like all you have to do is you look at the growth in usage of Ethereum, and it's just far and away more used and has like greater use cases, and it's got proof of stake coming out, so it'll be able to have more transactions than it was at this previous price level. Like the last time we were at this price level, before it was like more speculative, and now it's still like somewhat speculative, but we see the uses, and we also know proof of stake is on the way. So like the fundamental value of holding the token is going to increase, especially because inflation is going to be much lower on the proof of stake chain too. If I'm not mistaken, with the London EIP, the Ethereum Improvement Protocol, because of all the burning that takes place from the fees, Ethereum's actually going to be deflationary once proof of stake goes live. So overall, it's like this is a good price for Ethereum. I don't know if it'll go lower, but this is like, if you're buying here, you're in the money in like 2-3 years time. There's no question in my mind.
I mean, I agree. I certainly think that for, Ethereum is in my portfolio. It's the second largest part in my portfolio. And the risk to reward here, it's just simple math. What do we think I mean, anybody can do this. You don't need to do any advanced technical analysis or, no charting software like we do. Anybody can do this. Just think to yourself, what is the worst case scenario you think is going to happen to the price of Ethereum, right? Let's take some axioms for granted as we proceed with this analysis. Axiom 1, cryptocurrency represents a valuable form of technology that is fundamentally and economically transforming. I believe that to be an axiom. I think that we're going to see more of cryptocurrency. I think that we're going to continue to see innovation, and I think we're going to continue to see traditional finance elements be eaten up and absorbed into the cryptocurrency ecosystem.
Yeah.
So,
I don't think NFTs have even are even done having their day yet. I think there's going to be another NFT bull run at some point. I'm not saying this year, but it's just the use cases that were developed within this past cycle are real. They're far and away before a lot of the price appreciation that took place in crypto was on pure base speculation. And I'm not above it. I'm a speculator. But I mean that's all that it was. But we see the rise of like true fundamental use cases that bring value to the world and bring value to its users. And for that reason alone, I think we can expect to see more of the same.
Looking at the crypto bubbles chart right now, the cryptocurrency markets do seem to agree with you as we have a green day across the board.
Yeah, I mean, come on, BCH. Everybody knows it's the real Bitcoin. Look how it's doing.
Actually, it's funny. So during the lunar collapse, during the Luna collapse, when hold on, I apologize. Can you? Somebody's knocking at my door. Could you continue for just a moment?
Yeah. I can't see. What's the one that's up 17%? It's underneath me. Okay, I'll just go to crypto bubbles myself, guys. 1 second. It's EOS. Haha. So I don't know if you guys know this, but there's actually a pretty good fundamental reason why EOS has been pumping recently. EOS is coming out with their own new type of EVM that's going to sit on top of the network. So it's not like a side chain. So it's the Trust EVM, and they're promoting a new campaign where EOS stands for ETH on steroids. Now, admittedly, I was surprised when EOS's price dumped below $3. I really felt like because EOS had held there from like all of 2020 and 2021, that was like, it sort of like even during the price collapse during March of 2020, like it didn't go below that price level. I was surprised. But I mean, if you look at the ETH Bitcoin chart, we came up off the bottom and we're back in the previous trading range. If you look at EOS ETH, the EOS Bitcoin, if I said ETH Bitcoin earlier. If you look at EOS ETH is broken out of like a 3-year downtrend, and it's coming back up now. I don't know. EOS could outperform some of the market going forward just because it didn't have an alt season. It didn't really have a very good cycle. It went from like $3.15 like briefly during the fall of last year, but that was the extent of the alt season. So yeah, I think EOS looks interesting in this spot. Are the whales stepping in for buy the rumor, sell the news? I'll tell you, they are, but it's concerning to me because pretty much every single person I've talked to about like, hey, what are you going to do about the ETH merge? Like, how are you going to play it? Everybody says, oh, I'm going to play it where I'm going to hold it up until, it's right around then, and then I'm going to sell the news. Nobody has said to me that they aren't going to sell the news on Ethereum. So as we know, if everybody in the market plans to do this one thing over here, then we know the exact opposite reverse thing is going to be the thing that happens. Like I don't know. Maybe that means that we don't buy ETH until after the merge, and everybody has sold it, but then everybody's so excited about it that it just takes off. Or maybe it means that you just shouldn't play Ethereum at all right now, and everybody who is trying to is going to get burned. But all I know is that it doesn't seem like buy the rumor, sell the news is the right thing to do here because that's what everybody is doing. And that's not what we should do then.
Yeah, I find this concept very, very interesting. And we've talked about this before. So the fact that so many people are positioned net short, you've got to wonder, like, does that mean we're set up for a short squeeze? Now, again, I'm trying to contrast that. While I do think that a short squeeze is possible here, and this is why I kind of do have my upside price targets, and that's the risk, that's the risk setup that I currently have right now. I don't think that the bear market's over, and I don't necessarily mean by that we have to assume that another plunge is imminent.
We could trade sideways for 3 months. That's a bear market.
Yep, indeed. And tomorrow's show, I'll go over some more price points for you guys. I have shared them with the premium members in the premium trading group in my Signal group, but I'll go over them a little bit more in tomorrow's stream. But essentially, I think we can very clearly establish what is a safe stop loss for this current area, and take a nice swing trade up into our target areas above. And that's not going to preclude, that's going to be the short squeeze to flush out individuals that are positioning net short here. And that still leaves us open to fall back into this accumulation zone and continue to move sideways. Because what we've noticed from past bear markets, we've been down here 36 days, I believe, on average below the 200 weekly moving average and the realized price per Glassnode. And on average, we're down here for about 130 days. 136 days is about how long
we haven't spent this long below the 200-week moving average before, have we? Before, it was like a wick down below it, if I recall.
That's correct. This is the longest we've ever spent below the 200 weekly moving average.
Okay.
Oh, and I wanted to circle back to something you were talking about earlier, which you were talking about who's selling at these prices, right?
Yeah.
And I think the correct way to think about it is, well, so first off, I believe I agree with you on the idea that from an individual investor perspective, right? If you're just evaluating a seller as an individual who is making a rational decision about whether the risk to reward ratio of holding this or selling it is greater or less, I don't think it makes any sense for anybody to sell here. But I think one thing we need to consider is the reality of positioned buyers who are now forced sellers. The only thing that if people have already bought crypto, the only thing they can do is sell. That's the only thing they can do, right?
Yeah, okay.
And
they could buy more.
Would they? So if we look at, I'm just thinking of examples. So for example, firms and funds that have cryptocurrencies on their balance sheets, if we continue to see macroeconomic downwards pressure, bond yields rising, what the energy crisis over in Europe, the war in Ukraine, if all of these things continue to pop off, supply chain shortages, a resurgence of COVID, any of these things could happen. And, whether they're excuses, reality, or bad, it's going to make things continue to be worse overall for people. Recession gets worse. And that forces these individuals to begin trimming their risk profile and risk appetite. And whether or not the individual trader in the pit who took the position thinks to themselves, what do you mean? Why are we dumping this? The risk to reward in 2 years, as well as I do, funds and firms have bottom lines and they have accountability to their investors. And they're like, all right, well, we had to drop 10% of the portfolio so that we could, return, a negative 5% return this year instead of a negative 8%. You know what I mean?
Sure. I guess we've got Q3 coming up.
So that's one.
Doesn't the end of Q3 happen right around the same time as the FOMC meeting?
So interesting you mentioned the FOMC meeting. So I wanted to kind of get your take on this. I think, so this is right in line. Remember earlier when we were talking about the fact that there's more net short positions than ever before?
Yeah.
This is being interpreted as funds, firms taking the largest short bet almost ever. The Fed is going to maintain their hawkish stance at the FOMC meeting and go for a 0.75 basis hike instead of just a 0.5, which is what the Fed has kind of stated that they're going to do. So interesting to see what result that has on the market. But my overall thoughts has been that we're going to go through this period of quantitative tightening. The crypto is going to move sideways, and then come spring of 2023, we'd really start to move out of the bear market. The Federal Reserve actually tracks the movement of futures
for interest rate swaps, and so they can give you like 75% of the market is predicting like a 75% rate hike, 20% is 0.5, and then like 15, blah blah blah. I didn't, maybe that adds up to 100. I didn't do the math real good, but my point is we can actually look up what the market is predicting for the next funds rate hike. Why don't I find the link and I'll send it to you to bring up while we do this. We can keep talking, but.
All right, while you're doing, I'm gonna see if I can't do something here real quick. Give me 1 second. Okay. So hold on a sec. They can't hear you. Audio output. Now they can hear you, but they can't see you.
Market is split down the middle.
And let me just crop you in here. Go. Oops. Almost.
Here, I can drop it in here for the members.
Okay, and then all I have to do is reduce my size. There we go. Not bad. Now we can, I think this is what people were requesting. Somebody had asked if I could make you smaller, or not make you smaller, but move you around so they could see the charts. And I believe I've accomplished that. Although now I'm kind of cut off right here. But I digress. Oh, there we go.
There you go. So there you can see the probabilities market is split down the middle for next month. They're totally not sure which is going to happen.
Copy link.
It's like literally 50-50. Well, it's 49.5, 50.5, but it's 50-50. 50-50.
So target rate probabilities. Current target rate is 225, 250. Interesting.
Yeah, and if you look at the top, you can actually choose to look forward to. So you can see what the predictions are for the FOMC meeting after that and the one after that too, because people have interest rate swap futures out that far. Of course, they've got a few meetings worth.
Yeah, so that's interesting too when we're talking about Ethereum, because the Ethereum, so the futures markets in Ethereum are in backwardation, which means individuals are expecting lower prices in the future.
Yeah, and that's why the funding rates are so high right now.
Yeah. All right. I did want to get into this real briefly. So for those of you guys who follow the channel or have been around for a while, you guys know that the primary way that I trade is with a daily time frame trend following strategy. This is exactly how I teach people to trade. My Pathways to Profit course. Exactly the kind of support I want to continue to give people. So we've got a very simple suite of indicators on the chart here. These are all the proprietary indicators that I've created. You guys have access to Watt-Tar Explosion. Anybody can use Watt-Tar Explosion for free. Minx, Parallax, and the baseline are locked behind our paywall. But we've got the Hall 60 here acting as our baseline. And I just want to point out how well this thing is essentially done at just telling us when to take action in this market. We essentially dropped below the Hall baseline all the way back in April of 2022. So we dropped below it significantly here, obviously in December of 2021, had significant downside, consolidated around the baseline for a while, dropped back below, and it has just been acting as a beautiful area of resistance. We did recently.
I just want to remind everybody that one of my last acts as interim lead analyst, Alex Pearson, was to get the group out of the market in November of last year, once we fell below that moving average.
Did really good, man. Yeah. So we've stayed below the Hall 60 this entire time. We have come up, briefly consolidated at it, broke above slightly just on this recent rally, and we are now back down below it. So again, very similar to what we're seeing with the 200 weekly moving average, very similar to what we're seeing with like the Bitcoin realized price and all these other price models. But what's interesting to me is kind of these clear indications that you shouldn't have been really longing these pushes up, like that the trend wasn't really there, because Minx, which is our momentum oscillator, went overbought on every single one of these pushes up, right? Indicate now, obviously, predicting tops a little bit harder than bottoms, but just a good area of confluence there. And one thing I do like about this area of the market that we just kind of sprang down into is that Minx has gone oversold, and so is Parallax. And Parallax going oversold is generally a good signal for a dip buying opportunity. We can see here that on this this most recent collapse down to the most recent low, the lowest price of 2022, Parallax went oversold as well. So I do like this area. I do like this area to pick up longs. This is exactly what I recommended. And Alex, as you and I spoke yesterday, I'm going to bring up the BTC USDT chart so that we can look at that shelf that I found very interesting. So we'll use VRVP. Used to be VPVR, but now it's VRVP.
Oh, I think it was XBT USD. Was that where you could see the shelf so clearly at the bottom?
Yeah. Hold on just a second. I got to resize this. Okay.
And the volume shelf is going to be a great place to target for a long or for a short, because if we cross below it, that's going to be a significant area of resistance above us.
I think we can see it pretty good here on the weekly chart, actually, of Binance.
It kind of sticks out.
Yeah. So I just wanted to.
It's so strong and clear on the XBT. I think that's why I thought it was. Yeah.
Did that work? I feel like that didn't work. Interesting. Oh, I know why. Because I'm hiding drawings. There we go. Okay, yeah. So here's essentially my my current setup for BTC USDT. You guys can see my targets above. And I think that overall, this area right here, let me just zoom back there a little bit so we get that shelf. There we go. You guys can see this high volume node that correlates with this previous area of consolidation in BTC USD's price the last time we were down here. This was all the way back in 2020, December of 2020. So I would like to consider this current area, the current point of control of the market, which is about 21,461, basically current price, down to the shelf as a respectable accumulation area to achieve at least at a minimum this price target. That's how I'm currently playing this area of the market. I think this is the highest R to R trade in the current area. However, and I'll say this to everybody, if you're not a massively experienced trader, you should be taking this time to build the skills that you're going to need for the next bull market. All right. These areas of the market are difficult to trade. They're choppy. They're fraught with peril. And if you don't know what you're doing, being flat is a position. Being flat until, especially if you're a longer term trader, earlier in the show, we were going over all these bear market fundamentals or core on-chain fundamentals, things we want to see to really indicate a true recovery in on-chain interest, that new speculators are entering into the markets, that we do have reason to believe that we're going to be entering into a long period of expansion like we've enjoyed previously in cryptocurrency. None of those things have happened yet. And so it really is a good, safe metric to wait until those is a good, safe plan to wait until those metrics do recover and germinate those ideas kind of a full stage recovery before people begin entering long-term swing positions. But for those who want to make money, that's the idea on the table. All right. Alex, go ahead.
Yeah, go ahead.
Nope, go ahead.
Oh, I was going to say, don't forget that everybody who accumulated good positions of 2017, like major altcoins, those never went anywhere. It was all the new projects with constrained circulating supplies that actually tended to do better during the pumps. So even though the prices in the market may be good right now, you should be pretty careful about what you accumulate.
Yeah, that's a really good point. Yeah, this is I would not be loading up on altcoin bags right here. You know what I mean? I would be focusing on Bitcoin and Ethereum, the majors, giving yourself a nice portfolio, and also keeping in mind that, and I've come to truly believe this over the past few years in crypto, because I just have to look back on how was I successful. If your portfolio is too diversified, you're not going to be able to keep track of it all. So if you hold 20 different tokens and you have, and I mean, sizable positions, like, doesn't matter. We're not talking, it doesn't have to be millions or billions, but whatever size is to you. You know, if you have an amount of money in the markets that can substantially affect your well-being or significantly damage your well-being, depending on which way prices go, then having it too diversified is not, in my opinion, to most individuals' interests, right? Warren Buffett is very famous for saying this. This is very true. Concentrated bets grow wealth. Diversified bets maintain it. And if you're in a situation where you're looking at cryptocurrency as a real opportunity to change your financial future, diversifying your portfolio too much is not going to be helpful. If you and another reason why is if you have if let's say you have 20 coins and one of those 20 coins is you pick the next Luna and it does really well, and that could have been life-changing money. The problem is, because it's such a diluted part of your portfolio, it's really not going to make that large of a difference. Whereas if you do your research and make concentrated bets for the future, that's how you can actually get life-changing money out of the cryptocurrency markets from the perspective of a long-term investor. The kind of the simple positional holding and trading kind of perspective, rather than trading in and out as we do to reduce volatility and increase overall upside and beat the markets in general. But I just kind of wanted to make that point.
Okay, I agree.
Okay. So we have been streaming for about an hour, and we've got to draw a conclusion to today's stream.
I guess today's conclusion is be long biased, but don't be married to it.
Yeah, I don't see any indications that we can expect a significant plunge further in the short term. And the worst that I foresee is sideways consolidation for a while. However, keep that in mind that that we don't have any data that the bear market is over, right? We don't have any signs of on-chain recovery. We don't have new speculators coming into the markets. Overall, even though most individuals are positioned short, volume is very low relative to open interest. And so there's just, we need more time. We haven't spent enough time down in the trenches. All right. So the worst may not be over. And again, I'm calling it live here on stream. If we do have another leg down, 13,800. It's the bottom price of Bitcoin. Set your limit orders. Thank me later. All right. That's about all I got, man. Alex, thank you so much for joining me today.
Thank you for having me.
I appreciate having you back on the stream, and I'm looking forward to many more in the future, my friend.
Me too. I'll see you around. Thank you all so much for stopping by today. We really appreciate it.
Indeed. All right. I'll get off the voice call, and then I'll do the normal outro. All right, bro?
Farewell, everyone.
Cheers, man. Woo! We did it. All right. Thank you guys so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. If you enjoy the content and you're new to the channel, make sure to subscribe or give us a follow if you're not watching on YouTube. But if you're watching on Twitch, it's good. No, we like it. We appreciate it. Make sure to join our Discord so you get access to our community. And if you guys are interested in anything that we offer, including our premium indicator suite, our Pathways to Profit strategy creation course, which is designed to teach traders how to build their own profitable trading strategy from the ground up, regardless of how much experience you have. All of that is included in the links in the description below. Thank you guys for all your support. I will do my best to be back for another live stream tomorrow. I will try to keep them. Right now, I'd like to keep to the recording and streaming schedule of one live stream a day, because that's going to give me time to create educational content that's a little bit more all-weather content that'll help the YouTube channel grow. So if you guys have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, make sure to leave them in the comment section down below, and I will see you guys on the next one. Cheers.